Welcome to
Yeah.
Thursday's support class. Please note that these videos are for educational purposes only and not to be taken in form of advice. If you need to know more, please visit our website at www.esttrader.com. So before you're going to go to class session, since it's 1st of July, let me actually share with you. Okay. So this is the output basically from the account that we basically started from May. So right there, so it started funded it. So we started the first week of May, so May 3rd, and we basically said, okay, for $500, we're going to fund that $500, and anything that basically we look into, we're going to trade it. And these are all the trades that we basically put in either in class or within the trade alerts. So since from the end, which stopped, I mean, there's still certain trades in there just through the S&P and oil, but June 29th. So this is basically the commission. So we're just talking about commissions with Missouri. There's the swaps. So the swaps is simply the interest, and these are the commission in and out depending on how many lots there are. So if we look, the probably highest in terms of the loss that basically did was the S&P right there. So what, 47, 49? Maybe remember this date right here with Perry. So that was mid-May right there. So it was a daily trade. And so far, in terms of the net profit, I'm sorry, the gross profit was 836. So basically we're up more than 120% at this point in time. But if we're looking at the net, reducing with the commission cost and the swaps, which is the interest, then it is just over about 100% basically. Okay, so it is good result in my opinion. So these are all as well. I just mirror everything what we do here with my other different accounts. But the idea of starting simply an account with $500 just to also see fit in terms of the level of confidence in terms of members, like say with Perry at the very beginning, before Shaloni basically joined in, and also gives the ability to, for my end, to also be accountable on what we're doing basically online. Okay, so based on your experience there, Perry, did it help by having this type of,
Yes, it helped me because a couple of times, the drawdowns are pretty heavy, and I have to kind of, like, even right now we have a couple of drawdowns where I'm sweating almost, but it definitely helped me understand. Yeah, this,
okay.
like, we used to share every week we'd share our account, and yeah, it helped me because I was always within a couple percent of you. So
Exactly. So it should be, I mean, there's going to be always a standard deviation between results, right? Because sometimes I know Perry put in trades that I don't put in trades, or whatever he sees fit, which also he shares on Telegram. And sometimes whatever he puts in, I do put in. There's a couple last month that I did that. But because right now we have oil and the S&P, I haven't put anything, to be honest, because we're managing basically on that drawdown. So yeah, we're not touching that. It's just a matter of time before like to do its thing. So the majority of the trades are either a lot of swing trading. It's very seldom we do like momentum trading. I believe the only time we did momentum trading is when if we have FOMC or we trade at mega early, like 5:30 in the morning. Like my time, Paris time is 7:30. All right, so just to update you guys with that for the past 2 months. So the best month is definitely June, and for May we established around 30 odd something percent. And then the month of June was an exceptional month that is approximately about almost around 80 odd something percent. So you should have the same without the current drawdown. So in terms of just results alone, you should be around that 80% as well, right? Probably even higher, because I think the couple of trades that you did 2 days ago that you shared. So
yeah, I'm looking really quick. Let me see. Okay, where to? Oh yeah, I'm okay, I am. So yeah, I'm 70%.
70%. Okay, cool.
Yeah.
All right, so that's basically just to share as an update. We're going to discuss this a little bit more tomorrow for the group coaching session. And yeah, so pretty happy with this one because the only loss basically for June is this, which got stopped out, the stop loss in euro yen, and this is the exercise that we did 2 days ago with a pound dollar. So having that stop loss as well through there. Okay, so these were the two experiments based on theory that we did 2 days ago as well on the 28th. And then this one was a trade that we put in by the trade alerts. So, okay, so that's just the update with you guys through there. All right, let's go to the markets quickly here. So definitely the S&P, they're pushing. I don't know who's pushing it, and there's really nothing to end this at this point. But the amount, look at the sizes of those candles is not massive compared to what we used to basically have through there. So just be aware still. I know that they're pushing it up, and the question is who is pushing it up? Who knows? Okay, so but the major one will be tomorrow. I'm looking forward to that one. So since it's non-farm payroll, we're gonna trade non-farm payroll. So I'm gonna open up the floor tomorrow at about 5:15 in the morning. So 7:15 your time there, Perry, and then Shiloni, maybe around lunchtime your time, somewhere there, or late morning. So yeah, we're gonna check that out. And see if there's gonna be opportunities later on too. All right, the Dow Jones. Dow Jones, of course, plays a. This is the actual ticker itself. So this has more like it's more lagging. I don't know what's lagging, whether the Dow or the S&P is lagging. In my opinion, the S&P is actually lagging. Volatility index is within that constraint. So they're just waiting. It's going yo-yoing around, and it will either go up or go down. But through history, it is still on the bottom end right there. So there's a range between 11 and 15 since 2018, even 2017. Okay, so it's just been lagging on that side. And the other thing that need to be aware is because it's summertime, it's always simply the case that institutions, some of them are on summer vacation, so or summer holidays, and that's what's causing for the markets to react. Okay, so it's too expensive, in my opinion. So I'm still bearish. All right, dollar index create a new high. So this is basically what we're discussing 2 days ago, that they're pushing it through around that 92.50. So it did create a new high, 92.54.4, 92.50. So next one is from a higher high perspective, higher low, and then next target point is that high right there at 93.43. So medium to longer term, I'm still very bullish with the dollar index, and hence that's why I'm going long the majors against the US dollar won't be ideal. It is way better to short it at the right time, the right opportunity. Okay, so Other one is oil. They're definitely pushing it all the way up to that 76.88. Same thing with this. It is in a overbought territory. Oil and the S&P have the same correlation, and there's a lot of divergence within the dollar index, which is one of the major indicators right there. So I'm still excited with it. It's just basically, just like I said, just a matter of time. And if when it, or it's not more of a if it's more of a when they start to tank, then payday will be a very hefty one. So it's okay, just being patient. Okay, so oil, same. I'm still bearish overall, but it's just a matter of when. So you can also hedge, but the weeklies are already showing some good signs in there too. All right, copper is, I'm sorry, we'll go through gold first. They're trying to push it way above the 8 or the 10, but doesn't want to do it. So as long as the dollar index is going to be strong, this is going to keep coming back down because it created already new lower lows and new lower lows through there. Based on forecasting, it's still around the 1680, somewhere there, sometime. But of course, there's these barriers that it has to go through as a level of demand. Okay, so still bearish with gold overall, but of course, there's also a great opportunity for going long as a corrective perspective. But since this is still a lower low, so I'm not bullish as yet. So it's just waiting for the time, the proper time. TYX is currently up at this point, so filling that gap. Now that there's a clear another higher low through there, then potentially it can go to beyond 220. All right, so those are just the bases on the macro fundamentals. Tomorrow we're going to look into that more based on non-farm payroll. Okay, any questions with the macros? Do you guys see anything differently?
No, I kind of, yeah.
Yeah,
see
looks
it that
good.
way.
Awesome. All right, let's look at the majors against the US dollar here for a sec. Aussie created new lower low, touched the low of December 2020. Low of that one is 74.61.8, 74.62.1. So still higher low. And it's not just like about less than 2 pips basically. With it being bearish at this point, in my opinion, there's going to be some form of doji and it'll go up, or depending on what the news is going to be, since you only have one right here, odds and probability it's going to penetrate it through below it. It's more than likely, unless all these peaks will be supporting it as well. All right, so that's the Aussie. Euro looks really good in terms of a buying perspective. So, however, just be aware, just be aware of it too, because of non-farm payroll. And since this is still on a down side of things, they could easily push it back down to 117 next week as well. So just be aware. But we will look into that one as it gets closer. Looks really nice, but 2 bearish candles that create still at the level of demand, no go. So no one's willing to buy, no one's willing to sell either. Hence, that's why you have a doji right there. Pound breaking out, really good. Down another 60 pips today. The odds and probability that it's going to touch this trend line right there is highly probable, around that 137, probably another 60 pips, which has a big range, or within the range of this low, 37.16 and 36.68. So that is approximately 40 to 50 pip range of buying air. So gonna wait. Still basically tanking through there, looking nice. Kiwi, same thing. It all depends if this is great. One advantage of this one, I'll be looking at this trade actually, is higher highs, higher lows. And within that, and within the doji, but that also created, if it finishes like this, despite a higher high, higher low, then it's not going to be official. It's also going to create a higher low. So there is approximately around 190 to 100 pips to the upside. So that's also a good one right there. So just be aware too, though, that because it's also a gravestone doji, level demand, this could easily come back all the way down 69 at something to test demand area. So non-farm parallel is what they're waiting for. Dollar CAD, very nice. Still within constraints, but it's also running out of steam. There's some major reports tomorrow with the CAD and non-farm payroll, so they also go hand in hand. And I believe it's unemployment rate as well with CAD tomorrow. I think. No, it's not. I think there was. Okay. Building permits. So Lagarde's going to speak to you, by the way. So have average earnings, unemployment rate, and non-farm employment change right there. So remember, they're forecasting that to be 0.2 below it. So if it's going to happen, and I believe that's all already factored in, and maybe perhaps that's why the S&P is going up at this point. And who knows, whatever that raw report, I know that the report has already been leaked out, and hence maybe perhaps that's also one of the major reasons why the the S&P has been going up. So they know something that we don't know, and then depending on what the report is going to be, then they will push it back down. So that's just one story, of course, one narrative. But there's the other narrative that it could continue. So question is, how far is it gonna go? Which we can recalculate that. Okay, let's look into it based on fib extensions. Let's put it the other way, sorry. $43.22 will be the first one. So pretty close. Almost there. And then let me see. 73, then 43.71. If so, I am not willing. I'm gonna start taking some of the losses if it will break through there. However, if it chooses to correct all the way back down to 42.80, 42.60, somewhere there, at least 50th percentile, 42.40, then I'm gonna go back to the buying here. So from a correctional standpoint, we're my target point is approximately here, this 42.55, all the way down there, 42.47, maybe even the 62 at something, 42.30. And then it will go further to the upside unless a lower high will form somewhere. And then you'll have to fill in this empty space. And from a bigger scale of things, seems it's such a big move. So that's basically from what we drew there. But if we're dealing with a correctional standpoint, let me put auto here. This whole impulse through there. So if it chooses to tank, this is going to be massive. The higher it is, the better it is. So for now, I know there's no peak. Then that 50th percentile still, I'm looking at this period through here. So that's approximately around 10% drop, or even above 10% actually. So even go all the way down to 35. That's there. I mean, 3,800. That's really good. That's 500 points. And but you're dealing all the way back down to 32. That's 1,100 points through there. So, and if that happens, then you'll be very happy. Alrighty. Okay, so that's what we're basically just waiting on through there. Okay. And next, your dollar CAD, dollar Swiss. Dollar Swiss is now within the 62%. So I know that volume is still huge, but if volume was a depletion today, then the odds that it's going to fail is more than likely. But if not, then they will break this one out, heading towards around the 93 price point. Dollar yen was a nice one from what we're discussing here a few days ago, and yeah, it went up. Now it's 100 pips for the past 2 days, so that's also really nice. I believe they're pushing it all the way that 112 area, so another 50 at something pips. Since that created a higher low, a new higher high, I have no doubt probably a new higher high will also happen if that will occur. So it's too strong, too powerful, and there's really nothing there to short, so you can't really short that one. And let me go through here again, so just a little bit. You have an uncertainty candle, since you have also this very bearish candle. I'm more bearish than bullish, to be honest, but if it finishes like this, then yeah, because of that lower low, a minor either lower high or a minor higher high will happen. Euro yen, same thing. From higher low perspective, they're pushing it right there, 132.69. Pound yen still below the 8 or 10, bearish with that one. Swiss, this one looks good to go to around 121, so there's approximately 60 odd something pips in there. CAD yen, same thing from higher low perspective, since it's in an uptrend. There is a potential to go to 90.30 all the way to 91, so it has a range about 100 pips. Kiwi, same from higher low perspective. Everything's in an uptrend all the way through around 78.40, 60 outstanding pips. It breaks through that, then it can go all the way to around 80. Okay, so that's so far in terms of market update. Any questions with the market update?
No, I just hope we're right.
Yes, and we'll look into definitely those ones. In terms of monthlies, since we are now in the new month of July, S&P is very bullish. You can see through there. Look at the lack of volume on the other hand. The volume for the whole past basically a year has been really low compared to since 2019. The question is why? Why is volume so small compared to previous years? That I don't know. It's almost like back to where 2016, look at that, 15, 16, 17, 18, and then mid 18 all the way to 2020, halfway of 2020, actually even September of 2020 was pretty huge. Then all of a sudden it's all flat. It's almost like nobody's trading or no one's buying or selling or getting into the markets unless because of volatility, unless it's all relative, I don't know. But at one point in time, unless they're just cautious about it, and once they have a better, clearer picture, then you'll see more volume spiking in there too. All right, so that's on the within the S&P. Dow is totally different. You have a hammer through there, so you have a lower high, lower low, potential bearish through there too. So is the Dow Jones leading compared to the S&P? Who knows? But if this one is lagging, then it will continue with 36,000. So same thing with this, from 17 all the way to 35 in a span of basically 1 year. That's it's unbelievable, right? There's no way that the markets can be very sustainable. And if you're dealing here since 2008, which was the last, from 7 all the way to 2009, this was the last crash. I don't know if you call this a crash, basically when the pandemic hit, but they're gonna find another problem in order for the market actually to tank. So remember, I mean, if you notice, there's no wars. The only war at this point in time is through the war against the vaccine with the pandemic. So it's either that or something will occur, war will break out, this is gonna tank. Here, this was a financial crisis, right? So they will find another loophole in order for the markets to actual tank. And then if you notice here, this is also within war, basically in the Middle East, 1997, 98, same thing, early 2000s, 2003, this is also basically through the war, actually 2001, 2002, 2003, because February, yeah, March hit, became bullish. So this was all war in the Middle East, basically in Afghanistan. Yeah, so when gold basically tanked here, the market went all the way to 2007. Seeing this one, yeah, when this one basically hit, I remember that one, 2007, and that was the start. Really, really nice. So it's the same thing, just waiting for something like this. And remember, it rhymes. History doesn't repeat itself. Basically, it just rhymes. So once that another cycle, then this is also going to tank all the way back. Okay, so it's just a matter of time when actually that happens. All right, monthly, looking into monthly volatility index, same. So if you notice, same thing in terms of what's happening. Look at this one. November, December, January. There is already that spike. It's almost like they know something's bound to happen. So with all these things, like, being an observer with the markets gave me the ability to really see the whole manipulation of the whole global component of it. I started trading in 1996. So I've seen a lot of different cycles basically in the markets. I've seen the war in terms of the Gulf War. I've seen, so 2003, there's two Gulf Wars, right? The 1996 one, 97, then you have the internet boom and the internet basically meltdown. Then 2000, 2001, all the way to 2003, where there is the war basically hit. And I mean, we don't also forget basically what happened in New York, right? So this is what happened basically September 2001, I think it was. I was on my way to the airport to visit actually my grandfather here. My parents were already in the US, but they had to cancel because they had to cancel the trip because of what happened. So 9/11. So that's what happened right there within those spikes. And then 2008, this was the major big spike. So that's another one through there. So all these things, also certain spikes with the manipulation when Swiss went all the way back down, like about 1,000 pips. And there was, according to, I think it was a trader from, not Goldman Sachs, but he traded either Johnson & Johnson, and I think the stock price dropped massively before it came back up. And then here was another one, 2015, and then of course 2018 during February, and sometimes it happens around September, October, and there's a lot of spike. So if you notice here, there was an increase, and then to February, that's when the start of the virus basically starts to happen, and then shut down, poof, right? So same, you're seeing a lot of spikes in there of high wave dojis, and once you'll see more within an increase in the body of the size of the candles, that's where the momentum starts to peak in. All right, so that's one from that perspective. You're waiting for another wave to go up, they also have to fill in this gap right there within this high wave or that upper wick right there. Anything that has a lot of upper shadows, they all have to fill in those gaps at one point in time. So even through there, they're trying to fill it in. Okay, so yeah, that's basically, if you're looking at, if you look at the charts and you want to observe it very well, you can actually see it properly. All right, dollar index, same with the dollar index, right? So very clear cut that this is very strong. And no doubt it will go back again to parity or 102. So the dollar will become stronger once again. So if it finishes like this at the end of the month, then I'm going to be bullish with the dollar for a very long time, basically. Why? Because the past 2 years, or since 2020, almost approaching 2022, see right there. So there's a change of trend. You have a lower high, but have a higher low. So either a new lower high or a new higher high somewhere sometime in the future. Okay, so same. Longer term, I'm way definitely bullish with the dollar index. So when that happens, they're going to start, watch, they're going to start increasing interest rates. Maybe that's another area that once the Feds will start to increase interest rates, the dollar will going to go up. And because also inflation, and you have deflation. It's just too much. There's no, it's not sustainable. Okay, so oil, same. Approaching within that high, like I said. So it creates a new higher high or a new lower high, but because of that new lower low, this is going to tank all the way back down to around 30, 40, 30 until it creates a higher low, a clear cut of a higher low. Unless if they're saying that they're pushing it all the way to $80 a barrel, then if a new higher high, then new higher low will form in the future. Okay, so that's those are what basically what we can see at this point in time. Very similar with Brent or crude oil. So lower low, this is more manageable than US oil, to be honest. Gold, same thing. If interest rates or if the dollar index will go up, which I'm bullish with it, from that lower high, the new lower low will happen back down to $1,500 an ounce through there. That's a form of a wave to head back before it will go back up again. All right, and then copper, same thing, all the way back down to $4. TYX, same from a correctional standpoint, continuation, which makes sense because of the bond market goes up, the dollar goes up as well because of the interest component. Aussie was a very bearish, depending on what we'll do with this one, back to from a lower high, either a new lower low or a higher low, back to around 50, 60 cents right there. Euro, very bearish from last month, lower high, new lower low, same. Potentially it can go all the way back to 112 as far as I'm concerned. Pound has its own mind, but you have a dark cloud cover in terms of what happened last month. So this is lagging compared to the others against the dollar index. Then same, potentially from a lower high perspective, it can go all the way back down to create a new higher low somewhere back to 119, depending on what you want to do. Kiwi, same, all the way back down to 62. Dollar CAD, first, which part of it is then you need to test at 126. If it's proven it's worthy, then all the way back to 130, 133, 136. Other than that, correction, continuation. Dollar Swiss is going to be very nice. I'm looking forward to this one. Close above the 8 to 10, then you will have, no, there is one right there actually, but way better because of a higher low than all the way to around 96, even back to parity, even 102. Last but not least, dollar yen all the way to 114, all the way up there. If it breaks through 118, 120, even all the way to 126 since that higher low. Okay, but within this range in 2017, it's just ranging between 2 points, 114 and 102. So pretty much we're spot on with the analysis at this point in time. All right, so that's the report for the monthly update with the macros and the measures against the US dollar.